Hello, I'm Rachel Carroll, President and Managing Partner at Edison. Today we'll be focused on an award-winning technology that the New York Times described as product placement on steroids. It seamlessly embeds targeted advertising into film, TV, music, and social media. So think no more annoying skip ad button. The advertising message is absorbed without any disruption to viewing. At a time where we're all sat at home glued to our screens and all the major streaming platforms are vying for consumer attention, there's never been a better time to speak to CEO of Mirriad Advertising, Stephan Berringer. Stephan, welcome.
Thank you, Rachel. Hello.
And you've just started trading on the OTC market in the US. Congratulations.
Thank you.
What does this say to the market about your outlook for the next 6 to 12 months and your US strategy?
Yeah. So I mentioned earlier we really took a decision last year, a very important decision that we needed to double down in the US or triple down, as said earlier. And here's the thing. I mean, ultimately, when you think about what this platform can do, and where it is, where it needs to succeed, the answer is US, right? And because in the US, we have the major entertainment companies. It's the biggest advertising market in the world. It is also the most, how can I say, valuable advertising market in the world. When you just look at the advertising spend per capita, I think, the US is like the triple of Europe or something. It's enormous. Like the gap is gigantic. So clearly, also when we think about fundamental technology platforms, all the ones that succeed in the US, and that's full stop. So happens that we took the decision that we needed to go very, very strong in the US from a business perspective. But that being said, then in the past, we've not been exposed at all and not really interacting at all with American investors, which is, is kind of, you could say it's legitimate because we've been operating more or less outside of the US in the past. But now that we are there, and now that, things are about to happen big time, I think is a very, very good moment for us to be trading in the US. So that's why, to answer your question again, I think it just says, or it underlines how serious we are and how confident we are with regards to, our acceleration in the United States. And so I think this is a perfect moment in time also to invest in Mirriad, because the progress that we're making is just very, very significant now.
So Edison recently initiated on Mirriad. In the last interview, you described the technology at length. In a nutshell, Stephan, why are all the major brands coming to work with you? And what do you see as the near-term revenue drivers for the company?
Okay. So when you say major brands, I think we need to look at two sides of the equation, because what we're discussing here is really a game-changing opportunity for, let's just say, the advertising and content ecosystem that obviously are intertwined because there's commercial interests involved. So specifically, we're talking about the big brand advertisers. So these are, who the advertisers are. These are the P&Gs and the likes. And of course, there are agencies who are managing the budgets, making recommendations, developing strategies, and so forth. On the one side, let's just say this is the buyer's market. And on the other side, we have the world of whoever owns, produces, and distributes content. And there's obviously very big brands there as well. The Disneys, the Viacoms, the Comcast, and so forth, Amazon, Netflix. And so we're talking really about these two sides of the equation, which for us are very, very important to bring together and amalgamate them along our technology, because we do have something that actually is really able to drive benefits for every constituent. And let me just reiterate this point, because our solution that, as you've just said, by the way, a fantastic intro, really has the ability to blend advertising messages, products, what we can think of, right, very creatively also into the content itself, and really have the ability, giving the ability to engage with viewers very directly through the content, is really something that is game changing as such, because it's not interrupting the viewing experience, and therefore, you know, not giving anybody a reason to actually press the skip ad button. Very oftentimes now it doesn't even exist anymore. But basically, because it is enriching the content, really sort of almost does a favor to the viewer, because, you know, what the viewer is seeing just looks better and has higher quality. And as a result of that, it gives advertisers a possibility to engage with audiences at a new quality level. And I think this is the most important point here that we need to really focus on when we speak about Mirriad, is that essentially that is the game-changing moment, because when you look at the history in advertising and all these evolutionary steps and all the things that have changed, but we've now come to a point where, I mean, speaking for myself, but I mean, we have lots of research that proves that everybody has gone like tired, right? Nobody wants to really be disrupted anymore, interrupted by big ad loads and so forth. It has been, I mean, the web experience, even if you're a subscriber to whatever a magazine or newspaper, even then you're bombarded with stuff. I mean, these experiences, the promise of ad tech, the original promise of ad tech, which was around really, you know, targeting and making messaging more relevant for me as a consumer, actually has, in my point of view, really gone void, and it's gone nowhere. And so here we come with something that is actually really almost puristic, giving new creative opportunities, pleasing the viewer, and by doing that, actually driving home much better, you know, results in terms of driving brand KPIs and so forth. So that's the one side. On the flip side, if you own content and you distribute content, you have now with Mirriad a device, I should say, or a platform that allows you to generate revenue, which you could call it's net new revenue, because I mean, you're spending or you're investing into the content anyway. So here you have the content, and now what we do is literally to create so-called inventory in the content that you as a content owner can then sell to the advertisers via the agencies. And so this is a net new opportunity, and that is obviously becoming more and more interesting given the competitiveness in the market. And of course also because, as we all know, many viewers are pivoting from, you know, let's just say linear television and so forth, and more crossing the line into streaming, may this be AVOD, but ultimately also subscription VOD. So here you have the situation where either the viewer doesn't want to see any ads at all, and it's just paying money to do that, or, you know, just wants to have reduced ad loads. And so here we are again with a solution that really creates sort of this intersection between you know, brands and the brand and the content in a way, again, that it's enriching the experience from a viewer standpoint. So, and by doing that, we allow content owners to make more money. So I think it's really fair to say that this is a pretty perfect situation to be in. And so to your question, and sorry for going for such a long tangent, I think what has happened through COVID now is that from a viewer's perspective, or every individual, I think there's and many advertisers we speak to actually confirm exactly this point. There's an overall, how can I put this? There's an overall expectation from a consumer standpoint to really get value for time, right? So time has become a very, very precious good. And so how can I say, the aversion or the fatigue vis-a-vis interruptive advertising and so forth has actually gone up. And you can also see that the demand for quality entertainment has gone up as well. You can see this in the amount of minutes and sessions in streaming. So So literally this tells every advertiser that new experiences are really, the topic du jour, and that basically, new means of advertising, communication, and engagement need to be found. I mean, it's not a new item on the agenda of brand advertisers in quite a while, but now I think it has really been accelerated. And at the same time, it is becoming obvious that not only the brand advertisers now are expressing a pretty steep increase of interest in what we do, but we are experiencing the same thing on the other side of the equation, which is, the content owners looking for monetization possibility. They're suffering from the same thing in terms of the ad fatigue and so forth, and looking at us as a really, really simple opportunity to generate more revenue without compromising the viewing experience. So we're seeing the interest coming from both sides. And again, we need to marry both sides because this is what we are about. And I think in the short term, we will be seeing these parts coming together, especially in the United States, which, as you know, we've decided last year to define the US as our focus market on top of the others that we have, but really to double down in the US. And so we've invested a lot of energy to making it happen now. And I think we're getting really close now to signing. I mean, we have many great partnerships in the US already, and we'll now, I'm very hopeful that we'll be getting to a place where we'll be signing some of the major entertainment platform companies. And from that moment on, I think it will become a matter of time in terms of a chain reaction when others will follow, and then basically through the amount of content that we can take to the market in terms of the inventory that, we'll get some really, really big scale into this business.
Great. And your vision and strategy for the business, Stephan, certainly seems to be working. Our initiation report highlighted a strong revenue build in the last financial year. And although it's still in relatively early stages, you now have multiple shots on goal with all of these major brand collaborations.
Yes.
What are some of the new commercial opportunities that you see opening up?
Yeah, that's a good question. I mean, we've from the very beginning, and you can look this up in old strategy, not old, I mean, talking old, 1 year already feels old, but in the previous strategy presentations, we've always said that, let's just say that the recorded entertainment, right, or scripted entertainment is really our starting point. And this is where, the company has started taking the technology to market. Within that area, as you know, after the strategic reset last year, we've really doubled and tripled down in terms of really increasing the effort. And again, we're coming to this moment or this situation or moment in time where we really believe that, this is now going to be the leap forward. Anyway, so that being said now, what we've always stated as well is that above and beyond scripted entertainment, we also have to look at sports content. We need to look at social. We need to look at some point into gaming. We need to then pair this with not only recorded, but also in the live environment, which is an immense opportunity. And we have to look into music. And music is really the area where we are now experiencing, since a couple of months, a very, very high interest from the industry. May this be the record companies and publishing companies and the artist management companies themselves. And the situation in the music business is of course, it is what it is. I'm not saying it's particularly difficult, but it is certainly very difficult because of COVID, especially, where one of the key revenue streams for artists, which is the live performance, has just broken away, right? A key revenue pillar is just gone, evaporated. And so everybody's looking for new ways to generate revenue. And here again, many of these companies, very many of these companies are looking at us and looking for the conversation and discussion to basically open up partnerships to figure out, can we eventually, make money together? Because we, and now I'm speaking like as if I was the music industry, so the music industry has holds a value that is immense with regards to the power in marketing. I mean, if you just take let's just say a music video, and I'm not calling out any artist name now, but a very popular artist, and you look on YouTube how many views are generated there, which, you know, at times it goes into the billions, and you compare that with scripted or even live entertainment. I mean, the balance is just, it's like this, right? And so that tells you, just from a business opportunity, that there's some massive value to be gone after in the interest of all constituents, because again, we're talking about, you know, the artist, the music industry, as the call them content owner, and of course the viewer themselves, the consumers of the music, the videos, the social posts, and the likes, and of course the advertising industry. So here again, we're trying to create the symbiosis, and as a consequence of this high interest, we are starting already. We have had some first executions in terms of, you know, some first video utilizing our technology in lockdown actually, and we've inserted brands, and so this is now, you know, in the making and building up very, very rapidly. So to answer your question, music is certainly one of our big new additive revenue opportunities that we are adding to the current model.
Excellent. And the business opportunity and the potential for revenue growth over the next 2 to 3 years is substantial, and not much is reflected in the current share price. But how scalable is the model, and does increasing revenue imply increasing headcount and cost?
Yeah. So just allow me to point you to one fact. I mean, in China, as you know, we have a great relationship with Tencent Video. And so this relationship has built up since last year, and, you know, we had to get all the wheels in motion, and, you know, get the sales teams involved. It takes a certain time to ramp up. However, just as a fact, on the basis of the same team strength in terms of, you know, people managing campaigns and so forth, and ultimately the platform, what it represents and how it operates, we were able, without augmenting any headcount or so, to basically, to run more than 40 campaigns, I think in June alone, right? So for 40 different brands, which gives you a sense of, wow, so here's a platform that actually you plug into. If I'm the content operator and distributor, I can plug this platform into my systems, operate with these guys from Mirriad, and basically, I'm not saying the sky's the limit, but it can scale very fast, and you know, at a very significant scale, without us, from our perspective, having to add anything to. So to answer your question, you know, I think the platform is basically ready. It's not basically, it is ready to really scale, and without having, you know, it's not forcing us to augment significantly in terms of resources. Maybe we need a little bit more QA and so forth, but that's normal for any kind of technology platform. And so if we do investments, it's probably going to be more on the sales side, but certainly not just from a operational or platform executional or campaign executional standpoint. So to answer your question, it scales very well, and that sits at the core or at the heart of the model. And the opportunity is that, you know, come major revenue opportunities, which we hope will now happen, then we can deliver against that.
It's tremendously exciting. Stephan, thank you so much. And if you'd like to learn more about this groundbreaking new technology, please visit the Edison website or email me personally at rachel.carroll@edisongroup.com. Thank you.
Thank you, Rachel.